Good morning. Good morning from Los Angeles. Markets just closed. Half day today. How's everyone? I enjoy doing these little short daily live streams now just to keep you guys up to date with what's going on in my life. Not life, but portfolio, obviously. Um, Pretty short today as well, about half hour, 45 minutes. I'll go through the positions. I trimmed quite a bit today. I'm thinking market's getting a little frothy for my liking. So, in fact, I bought some puts as well. I was short puts. I trimmed a whole bunch. And, you know, so give me 1 second. Let's see. Nope, we didn't do it. Okay. All right. So, welcome to Trading with Sergio Thursday edition. There will not be one tomorrow since it's the 4th. The markets are closed. We're going to enjoy a barbecue and a couple of beers. Back at it on Monday. Unemployment numbers came out today, stronger than expected, as usual. Every month numbers are stronger, but last month's was revised also upward. So instead of downward revision, we had an upward revision. So do we need interest rate cuts? President Trump keeps yelling at Powell. I honestly don't think we need interest rate cuts. So when the economy is kicking in, pretty much in not all cylinders, but it's there. It's not weakening. Unemployment is full. Inflation is still elevated. Why should they cut rates? Stock market at all-time highs. Bitcoin is at all-time highs. Gold is almost at all-time highs. Real estate all-time highs. Why do we need lower interest rates? Oh, we need lower interest rates because we have almost $38 trillion in debt. Okay. Yeah. Well, how about this? Instead of adding to it with the big, beautiful bill, how about we cut the debt? How about we lower the debt so we don't have to pay interest to foreigners and around the globe to the tune of $1.5 trillion? How about that? No? Okay. Yeah, that's how messed up the system is. That's how messed up both parties are. And I did put a video out yesterday, actually, right? The America Party. Makes sense to me. Nobody gives a shit about the American public. Okay? Interest rates are going to do what they're going to do. The Fed cannot control it. The president cannot control it. Nobody can control it. Interest rate bond market is so large around the globe, and don't just think treasuries, right? We have treasuries. All the countries, different countries, Japan, Germany, England, China, they all have treasuries. Add to that corporate bond. Add to that, CMBSs or real estate mortgage-backed bonds. There's trillions in bonds floating around the globe, right? The only way that can be controlled is by pumping more money into the system because we just, pass the buck down the road and let the other guy deal with it. Somebody has to deal with it. Elon tried to deal with it. He got fired, it looks like, or quit, one or the other. Second round of the fight between Elon and the President Trump has begun, it looks like, right? They're going at it on Twitter. He's threatening Elon with deportation and subsidies getting cut. And I mean, if they cut his subsidies, not that I don't think he depends on subsidies because, like any other private company, let's say for SpaceX, he bids for these jobs and he wins them because he does his job better than anybody else. His EV subsidies got cut. His car sales are in the tank. I don't know if Elon's life can get much worse. I mean, look, Tesla is Tesla. But my point in all of this is Washington is broken. It's been broken for decades. These politicians are bought and sold. They're in the pockets of lobbyists. They're in the pocket of special interests. They're in the pockets of corporations. And there's no denial about that, right? It's all politics, right? All party line voting. the big beautiful bill passed with J.D. Vance's tiebreaker at the Senate. In the House, it failed a couple of times. Now they're trying to pass it by convincing other people. They're probably giving him some special treatment, right? This is bullshit. This is complete and utter bullshit, right? Create a balanced budget amendment, okay? How about that? How about where are those deficit hawks that we had? What's happening? They're all quiet? Yeah, 37 trillion. In another 100 days, we're going to be at 38. In another 100 days, we're going to be 39. And the only way we can lower our interest cost or interest servicing costs and all this debt is by lowering interest rates. When we lower interest rates, the economy is already strong. Melt up. I don't care. I like it. You know, my account is at an all-time equity high. Who gives a shit, right? But the money we're making actually is not actual real money, because the money we're making is losing value. We're making money in dollars. If you invest in a stock and you make 10%, well, 6% of that goes to inflation and debasing of the currency and loss of buying power. So you're really not making 10%. Put the taxes in there, you broke even. Well, that's the point, that none of this makes any sense, right? So, and in all of this, right, the American public has no idea. In fact, I'm putting out a video today at noon. Please go check it out. The wealth gap between the haves and have-nots has never been higher. And the only way to get around it is financial literacy. Okay? How about we teach our kids about finance, starting at elementary school, right? Not complex stuff, but simple things. And not just go balance your checkbook. Who has a goddamn checkbook these days, right? Let's get off this stuff. Instead of teaching him other things, how about we teach him about how to invest, right? We don't, because we want to create a dependent society, and that's where we are. This is a dependent society. We depend on crack. What kind of crack? Plastic crack. The crack you have 10 of them in your pocket, called credit cards. Max them all out, get new ones, pay for those, grind and die. That's what this country has become now. You just grind all your life, go after a paycheck. At the end of the month, if I turned you upside down and shook you, not a single penny would fall out of your pocket, right? Because that's all you're doing. All you're doing is just taking the paycheck, applying it to interest payments, applying it to credit cards, and you think you have a good standard of living. No, you don't. All you're doing is grinding. And then, you know, we're on this planet for 70, 80, if you're lucky, 90 years. And then what? What do you have? So the haves and have-nots, gap is as wide as it's been. The have-nots die with nothing, born with nothing. The haves just accumulate wealth because they own assets. And those assets are enough for them to keep pace with inflation, to keep pace with the, debasing of the US dollar. US dollar has never been weaker. It's losing value. It's like toilet paper. Well, with this big, beautiful bill, adding, we'll see how many trillion to the debt, right? How are we going to do this? How does this end? I don't care how it ends. It's working for me. My account, trading account, investment account is an all-time highs. I'm definitely keeping pace with inflation, if not beating it by 10x. But how about the average American who has no investments, who has no real estate, who has no gold? What are they doing? They're buying their six-pack of beer, and then Verizon gives them an iPhone every 2 years on an installment payment, and they think they have a good life. They think they just watch a game on a 60-inch TV that they borrowed money on and bought from Best Buy. They think they have a good life. Is that what's happening? That's where we are? I'm being really honest here. I mean, if you guys disagree, if you do watch this, please leave a comment. Let's discuss it. I'm not going to debate it. Let's discuss it. Show me another way. Show me a way out of this. Because I certainly can't see one at the moment. What is the way? We run out of cash, we print. We put zeros on the ledger. What happens? More dollars. Okay? More dollars means less value. That's what it is. There is no ifs and buts about it. It's pure economics. Even if you didn't get Econ 101 at college or high school, which you're not going to because they don't teach you that stuff anyway, think about it. Think about your $100. take your $100 and go back 5 years, just 5. Think about what you bought with that $100 5 years ago, okay? It's a $100 bill, the C note. Nominally, it's still $100. It still says 100 on it. It said 100 5 years ago. It said 100 today, okay? You went out with that $100 shopping. What did you buy 5 years ago with that $100? Okay? Now, go out today with that same $100 and buy the exact same goods you did 5 years ago. Not 50 years ago, just 5 years ago. I guarantee you, you're not going to, that $100 5 years ago, today is worth 65. But it still says 100, right? Okay. So that's where we are. That's why you need to learn about financial literacy. That's why you need to learn about investing. That's why you need to learn about trading. That's why you need to learn about these things so you can just keep pace with what's going on, because your W-2s are not enough. They're never going to be enough. Have your W-2s gone up 6-7% a year after year? I mean, unless maybe you're a coder at Facebook getting $100 million bonuses for AI. How many of those are there? You know? So, yeah, I don't want to rant, but I mean, we are in some sort of pickle, man. And it just keeps getting worse. And because all we do is just kick the can down the road. A solution, you know, people ask me, well, what's your solution? You're talking a big game. My solution is cut the fucking debt. Cut the debt. Balance the budget. How do you do that? Zero-based budgeting. Whatever is coming in, don't spend more than that. Wherever the cuts are going to be. Is it going to be painful? Yeah, because we lived on borrowed crack for the last, I don't know, 30 years. Since we got off the gold standard, okay? That's where we live. We live in some la-la land. We live in some la-la land of borrowed money, right? Initially, every dollar we borrowed returned 5x. Great ROI. Every dollar we borrow today, with those deficits, trade deficits, and budget deficits, spend and, you know, print and spend, right? Deficit spending. Okay, yeah, GDP has grown. No problem. That's because of the borrowed money, and I'm not against borrowing money, by the way, right? But then there's sense and sensibility. You borrow money, you expect a return, at least 1-to-1. Then you pay your loan back, and then you made some money out, you know, on top of that. But if you borrow money, and today every dollar the government borrows returns 46 cents. So we're in the hole by 54 cents. That's why the debt keeps going up, $1 trillion every 100 days. There has to be some sort of fucking sensibility to this, man. All these people in Washington, right? What have they done for you? What's going on, right? Middle of the night last night, they're just scrambling to pass this big, beautiful bill. Don't get it. I'm just not getting it. And the solution is run the country like an average American runs their household. How's that? I'm making $5,000. If I'm spending $6,000, I'm in a hole. Now I'm at a deficit. Simple. The government's the same. The income of the government is $4.5 trillion to $5 trillion per year, the Treasury. That's the money that comes in, right? Where's that money coming from? Okay, paychecks, obviously, right? Personal income taxes, corporate income taxes, okay? Capital gains taxes, okay? So we're getting in 5 trillion, okay? Cool. That's just like me making 5,000, earning 5,000 after tax, okay? Now I got to go spend. I got to pay my rent, my mortgage, my car insurance, my car payment, my credit card payments. I got to eat, maybe go on a vacation, lousy vacation once a year. I pay my cell phone bill, all these things, right? Your cost of living. Okay. Well, the government's taking in 5 trillion, is spending 7 trillion for years, for decades. Okay. Now where are we? 37 trillion in debt. And every dollar we borrow today is bringing in 47 cents. Well, this is as simple as I can put it. I mean, I can talk deep economics if you guys want, but I don't want to go above anyone's head, because this is simple. run the government like an average American runs a household, although the average American is hooked on crack, plastic crack. Okay? Okay. Well, I guess the average American is learning from the big brother in Washington, because that's what they do, right? They take your money, squander it. Money comes in, money goes out. It comes in a pipe, 2-inch pipe. It goes out at a 3-inch pipe. Well, not going to work. Not going to work. And that's where we are. Look where we are. Much bigger version of Greece with a printing machine. So anyway, I'm just so frustrated, because me at 57, hell with it. I don't give a shit about Social Security. I don't give a shit about any of this. None of it. I made enough money. I'm blessed. I'm blessed. Thank you. Thank God. Thank God I used this $2 worth of brain I have. Okay. Well, how about the rest? I have a 20-year-old at third year of college. Okay. What's she going to do when she comes out? AI is coming in. I have a 16-year-old at high school. What is he going to do when he's done with all this? AI is coming, folks. It's going to replace every single entry level, if not middle to high level job, blue collar job, white collar job, all gone. Well, now what? The tech bros love it, right? Oh, AI. OpenAI is worth $150 billion. This is worth $300 billion market capitalization. How are you benefiting from this? How's the average American benefiting from this? I don't know. Tell me, somebody tell me. What is the future of my kids? What are they going to do? They're going to come to me and say, Dad, I need money. I'm like, okay, sure. Yeah, I can do it. I'll do it. Happily do it, because that's my job. That's my job to provide every which way. But how many Americans can do that? The average American doesn't even have a rainy day fund. Average American doesn't even have like a couple $1,000s cash sitting in the bank. We're talking college educated, finished 30-year-old couple. Saving rates in the tank. Credit card debt through the roof. What is happening, man? You know? So I don't get it. If somebody gets it, somebody says, this is the light at the end of the tunnel, Serge. We're walking towards it. Everything is fine. I'm looking at it as, that's a fucking train coming at me. That's not light at the end of the tunnel. I'm going to get crushed. Well, that's why I started this channel. I go, if I can, because that's my truth. Because I can't run my budget, my household, like the government does. If I did, I'd be broke, because I don't have a printer. I don't have a printing machine. I don't have it. So you learn, you get financial literacy, you teach, you understand, you explain that this is what people have to do. Forget about your 60-inch TV you're going to buy every year at Best Buy on payment, plans. Forget about your iPhones. Forget about that bullshit social media you swipe on all day long. Because it ain't getting you anywhere other than the poorhouse. Come learn. Let me teach you. Right? So, and I'm like frustrated, beyond frustrated. I shouldn't be, because my account today hit another equity all-time high. I'm up 63% for the year. And it's a 6-figure account. That's my just trading account. Forget the investment account. Right? I'm good. I see it. I figure it out. But what about the rest? What about my kids? Why should they be shackled with 37, 38, $40 trillion in debt? You guys probably, hopefully, understand what that means. Let me explain this to you. There's 350, 60 million people in this country, okay? There are people in this millisecond, there are babies being born. Get it? Okay. Every man, woman, child, and the newborn this second just incurred $125,000 in debt. That's simple math. 37 trillion divided by 350 million. That little baby that was just born crying for air has $125,000 in debt. I can't put it any simpler than that, folks. That's where we are. And that debt is going to keep growing because our interest payments are growing. So that baby who has no clue, all he's trying to do is breathe, because it was in the mother's womb for 9 months. Why should that baby have $125,000 of debt and then continue accumulating debt the rest of their lives? They go to college, they have a couple $100,000 debt that they have to pay for, college loans. What kind of crack of shit is that? Okay, I can afford it. I can pay for my kids' college. By the way, I think college is extremely overrated, by the way. It's bullshit. It's all marketing. Go learn how to do something with your hands, because AI is going to replace every single college degree, especially the 4-year useless college degrees that these kids, oh, I'm going to college. What are you studying? Anthropology. What the fuck are you going to do with that? What are you going to do? Right? Man, it's frustrating. And I shouldn't be frustrated. I should be celebrating, because my account's doing good. My investment account's doing good. I'm good. But I'm frustrated, man. So anyway, I'm done. Fuck. Yeah, apologies. Oh, fuck. Anyway, what's happening? Luis, good afternoon. Vic, hey, how's your trip? Hope it was good. Hey, my members, Traveler, GameX player, hello. I think you're new. Yeah, man. I try to simplify things. Okay, here's one of my members. I try to simplify things, right? I've been on this planet for 57 years. I have experience. If nothing else, I have the education, I have the know-how, but I lived longer on this planet than you, let's say. Well, why don't you learn from my experience, right? I'm putting it out there, free, Yeah, facts. Come on, you know what? That's because the market just closed. I don't have to pay any attention to anything. So let me put the link up. If any of you want to come on, not a debate. I don't want to debate. Right? It's not debate society. We're going to have fun. But here's the link. Okay. Yeah. I mean, I don't know. I tried to put things as simple as I can. Okay. And, you get it. You get it. Yes and no. I kind of yes and no. Why? Because being a minimalist, in the borrowing sense, yes. In the in other sense, no. I don't think so. I think you need to really, have your ducks in order more than become a minimalist. Your expenditures maybe should be on the minimal. Maybe you shouldn't go buy this $8 latte every single day, and save that $40 a week and DCA into something like Bitcoin or stock market or whatever. It's baffling to me that colleges they don't want to. They don't want to. They want to shackle you with more debt. They don't want to teach you any of that. Unless your degrees in economics or finance, they're not going to teach you any of that. None of the prerequisites are that. They don't want to. Don't you guys get it? From babies, from elementary school all the way to college, they don't teach you any of that because they want to hook you on crack, plastic crack. They don't want to. It doesn't benefit them at all. That's the freaking problem. So anyway, that goes. Remember, mother. Yeah, well, that does matter now. That did not matter. Okay, there's two theories, right? One was trickle down. How's that going, by the way? The wealth gap. I'm going to do a content in a minute now. The wealth gap is actually coming out today. The wealth gap is as high as ever. How did the trickle down economics work out? Huh? Did that work out? I'm a capitalist, by the way. No socialist, none of that bullshit. But this is capitalism out of control is also bad. Everything at moderation is decent. Everything at like ridiculousness is high. Yeah, Doug, if we lose, which I don't think we will, because that's the only saving grace we have. If the world reserve currency wasn't the US dollar, we would be Venezuela. I assure you we would be. learn trading and investing. Well, you're going to learn anything. You know, a lot of that is also not going to get you to the poorhouse. But I do agree. Learn investing. Trading is tough, not for everyone. Investing, yes, absolutely. Vic is on. Hold on, let me put him on, and then I'll talk about the subject. Okay. Read and study how rich people think. Yep. Well, rich people borrow money, right, against their assets they have accumulated. So I'm not against borrowing, by the way. But what rich people do is they accumulate assets to keep pace with this inflation or the dollar losing value. That's what they have understood a long time ago. Tariffs plus U.S. debt. Yeah, well, look at all of you. If you do trade, go click on UUP or DXY. That's the symbol. That's the U.S. dollar against a basket of currencies. Look where it's at. What else is there? Most college courses are nothing. Bro, they don't even teach. They just teach you how to balance your checkbook. How many of us have checkbooks still? I'm not even sure. They don't teach you. They don't want to teach you that because they want to create a dependent society. Hello, sir. How do you like my rant today?
It's just fine. There's a lot of crazy things that makes us all rant to ourselves in this world today compared to
I shouldn't be frustrated, Vic. I should be like thrilled, but I'm just frustrated. And actually, I had a crazy thought. You know, I'm actually, quit everything and run for politics, run for office. That's what I'm thinking, actually.
Wow.
Yeah.
Start
at try to fix LA first in the shithole that I live in.
Yeah, boy.
And then move from there.
They ought to ship in a bunch of trucks of common sense.
Yeah. I mean, there's no common sense left the building, man. I mean, there's no common sense. If we had common sense, we wouldn't be here anyway. But how's it going? You drove like
good. Yeah, I figured I'd jump on. I just got home. I had a doctor's appointment out of town early. I told you last night, and just no one was getting on. I figured I'd jump on. I don't really have anything to go into. I wrapped up my week in a nice position, yeah. It's a little tough for me to stay on top of it the way you guys are all day because I still work for a living.
Well, no, I mean, but honestly, though, it's not that complicated, right? It's simple things, and most of it you really don't need to babysit.
Yeah.
Right, and that's what I try to do because I have 6 other things that I'm trying to do during the day myself, right?
Yeah, but
and that's
I got on that RGTI on your
synthetic.
I like the synthetics and want to learn how to do those better.
Well, now I taught you guys actually last couple of times with AAPU and RGTI. I taught you guys how to turbocharge the synthetics by being unequal, right?
Yeah.
2 for 1. Take the money in, but spend all the money on the upside. Just accelerate the upside. If you really do have conviction, that's just you turbocharge it, and then. But then these, again, none of this is financial trading advice, folks. It's not for everyone. What I do is super risky. It may be called crazy, whatever it is, but crazy like a fox. It works. Well, for me, it works. I don't know what happens to the rest of you. But yeah, I think, I think those are simple strategies to benefit from when the market's like this. Look, every new all-time high. If your account is not an all-time high, you're doing something wrong. Or, well, that means your underlyings are not performing, right? Or underperforming. So if the market's at an all-time high, your account equity or net liquidation value, because that doesn't lie, you could be short puts, long puts, this all that stuff. If it's not at an ATH, you're doing something wrong, or you're in stocks or equities or indexes or commodities, whatever you're in, are underperforming. That's all I can say. I mean, but
I've been focusing on getting out of some stocks I've been in too long, and I've been we slowly getting through those, turning into cash. I'm trying to have a nice cash position every Monday because is it going this way? Is it going that way? Which way is it going?
Yeah. Well, I mean, if you've been in equities that are not performing, right? They're dogs, let's say, or
Yeah.
they started with short term and then you ended up being an investor now,
Yeah.
which happens to everyone, really.
Yep.
They all go, oh, I'm on a day trade, and then
Yeah.
they become investors. It's like how fast that changes,
Yeah.
Yeah, you need to clean those up because look, opportunity cost is real in this business, right? You have some dead money sitting there versus moving that money, because dead money is dead money. I mean, it's losing value. Like that, actually owning stocks that are going down while the market's making all-time highs is like putting money under the mattress. It's like you're going to lose value. It just doesn't make sense. So take that money, educate yourself, and then try to turn it over, because that's the only way. Only way you can get ahead. That's the only way.
But it's all. Everything's good.
Yeah, man. I'm glad everything is good. I'm glad you made it safe. Happy 4th.
Happy 4th. Happy birthday, America.
Happy birthday, America. Happy birthday. Happy 4th for everyone in the chat. Yeah, it's been it's been good couple 3-4 weeks for me. So I'm gonna try to keep it up, obviously. But I have my, you know what? You guys will figure it out. You're pretty new in the group, but you guys will figure out when I'm cold, and you guys will figure out when I'm hot. And we all run through those phases. I run through at least a couple. I mean, if not 3 a year. So bulk of my money is made in those like 3 months, 4 months. And the 8 months, I'm just kind of treading water. And so when I'm hot, tag along. When I'm cold, don't even look at me. That's why I look at it. But anyway, so all right, man. I appreciate you coming on.
Sure.
Hope you're doing well. Happy 4th. Stay safe. Don't blow your fingers doing fireworks.
Well, my mother said that more times than I can remember. Don't blow any fingers off.
Yeah. All right. You have a good one.
Yep, you too.
Bye-bye. Yes, I heard about that. How sad, bro. How sad. And his brother, 25-year-old brother. He's 28, 3 kids. I don't know what happened. I didn't, but my news feed, it was in my news feed. I didn't look at the details. I think it was a car accident, right? I don't know. That's very sad. So anyway, all right, I'm gonna have to talk about this topic. Should I? Yeah, I should do it now, and then I'll go through the positions, and then let's see if you guys have other questions. I'll go through it. Yeah, it's tough. So have you guys heard of this gentleman? He's I think he's 94, maybe 95. I don't know. You guys know him? WB, Mr. Warren Buffett, legend of legends. Well, a lot of people think he's lucky. I go, bullshit. No. What are you guys talking about? A legendary investor. Go look at Berkshire Hathaway stock over the last 30 years. How many X has it outperformed the S&P 500? What are you guys talking about? Because a lot of newbies, they're like, oh, Warren Buffett. And I'm like, what are you guys talking about? FYI, Warren Buffett has $350 billion in cash he's sitting on. And where is that money sitting, by the way? It's sitting in a 4% T-bill. He actually owns more T-bills than the Treasury does at the moment. So you guys know. Warren Buffett. Let's talk a little bit about Warren Buffett. Legendary. I mean, in my book anyway. Now, I do different things that he does, but then, we end up at this. It's the destination, right? Where we're going. But Warren Buffett has an indicator, right? You all heard of it? It's called a Buffett indicator. Do you guys know what it is? Do you? Well, I'm going to teach you guys what it is, because it's flashing bright blood red. Bright blood red. Okay? Here's the ratio. This is the Buffett indicator. Where should we start? Should we start with what the Buffett ratio is, or Buffett indicator is, or should we start with the chart? Oh, wait, pictures are worth 1,000 words. Well, we'll go to the picture. You guys will be stuck in the picture because I want you to take your mind off the picture for a minute. This is up to date, by the way. So the Buffett indicator, also known as the Buffett index or the Buffett ratio, whatever you guys want to do, is the ratio of the total United States stock market to GDP, gross domestic product. Pretty fucking simple. It's a division, folks. I hope they taught you in four-year college how to do a complex division, and this is not even one of those. But then I bet you guys won't do it because you guys will whip out your cell phones and put the numbers in there. Well, here we go. The Buffett indicator is total U.S. stock market value. That's total, just stocks, equities, right? NASDAQ and New York Stock Exchange, American Exchange, all that stuff, right? Divided by GDP, gross domestic product. Okay. Well, at the moment, to be at 200%, we are higher than that today because we just made another all-time high. But simply put, our GDP is about 27 to 30 trillion. But for this case, the study used 59.1 trillion of total stock market value and annualized GDP of 29.5 trillion. So you take 59.1 trillion divided by 29.5 trillion, you come up with a ratio of 200%. Okay, cool. Well, that's pretty high, according to the Buffett indicator. Now, last time that happened, so now we can mosey to the right side of the screen. Look at that graph. So this is the USA ratio of total market cap over GDP. As of, I think this is as of 2 days ago. Right there, as of 6/29, so we're July 3rd, 4 days ago. 205.7%. Okay. Well, that's the historical, since he came up with this is the chart. It goes back to 1970. And if you guys can see in the chart, there are like grayed out areas. See, I'm just going up and down with my cursor. Maybe you guys can see it. Those are recessionary periods. This is 1980, GFC. Okay. Not 1980. What am I saying? This is 1980 recession. This is the 2000.com bubble. This is GFC right here, 2008, right here. And this is where we are now. This little joke of an area right here is what we experienced, okay, during the flash crash, let's call it. We had about in April, tariff crash. Oh, FYI, the tariff deadline is July 9th, folks. You guys expect some volatility out of that? Yeah, I think so. That's why I'm just trimming like mad. I don't want to be too long. I don't want to be too short, but I don't want to be too long for sure. Anyway, that's a different subject. We'll go through that in a minute. So this is that. And now we're at a record all-time high. All-time. Okay. 205.7. And today I'm pretty sure since June 29th, market's up, I think, another 2%. 2.5%. So we're probably at 210%. Now, this is not an indicator like a short-term put-call ratio or, overbought, oversold, RSI, MACD, all that stuff, okay? This is just an indicator. However, the mean line here is right here. This line right across, right? So during the 2000.com bubble, when we got up there, which is about 130%, we know what happened. Folks, by the way, this right here, this what you guys are seeing, is only due to one thing. Your dollars sloshing out there, all this printing, all this deficit, all the asset classes going through the roof because we print dollars and we put it out into the economy, and then it makes everything worth less, and people go into what? Assets like stocks. And that's the reason. Now, is this red alarming? I think so. I'm not going to trade by it. It's not a tradable indicator, but there's many other ones. But I do pay attention to it when we get to 210%. And when I see certain stocks now moving 180, 200% a day, penny stocks are becoming really, fashionable again. And I'm going like, okay, let me just pull back a little bit here. Let me just clean stuff up in my supermarket basket. Instead of having 12 items to make a meal, I'm going to have like 4. And that's what I'm doing. And I'm trimming. If you guys believe in the Buffett indicator, you should not be balls to the walls long, right? Wait for the Buffett indicator to come back down to earth a little bit. And the only way that's going to happen is 2 ways. One, GDP is going to contract. Well, if GDP contracts, the indicator is actually going to go higher, so the stocks have to follow. If GDP contracts, that means we're in a slowdown or a recession. Well, this indicator will come down then. But we are almost 80% above the norm, which is 130%. Well, the old high, which is right about here. So about every time, what happens in this indicator? Every time we get in a recession, right? Well, look what happens to that indicator. Because GDP contracts, stocks follow, earnings go bad, and then we come out of it. So that's when you DCA. Actually, this chart will be pretty valuable for you all if you're kind of DCAing, dollar cost averaging into indexes. But to finish this, it's bright red. It's much redder than my Barca hat. It's like bright blood red, Warren Buffett indicator. So, I mean, some people care, some people don't care. I can't trade off of it, but I do pay attention to it. One of the many things that you guys should pay attention to it. Maybe I'll trim some. Maybe I'll take some off the table. Maybe I'll go a little more cash heavy. That's all. That's what that's for. I mean, if you do believe anything Warren Buffett has done in his last 60 years, and you question yourself, why is he sitting on $340 billion in cash and T-bills? So is he waiting for something? Is he waiting for this to happen? And he opens a $340 billion basket and buys generational wealth creating stocks? Possibly. I don't know. Because certainly him getting a 4.5% return or 4% return in T-bills is not what he's done to get Berkshire beating the S&P 500 by like 100x. Okay. So, yeah. So the warning signs are there. Again, I'm just saying, I want to be probably 80% cash by next week. I don't want to go short. I mean, I'm short things. You guys will see in a minute in the positions. But, anyway, I just wanted to let you guys know that the indicator is flashing red. So let's answer a couple of more questions. Thank you, man. Once in a while. I have my moments. Yes, we got that. I think he started investing. Doesn't matter. Compare it to when S&P was started. Not matter at all. Mr. Premium. Yeah. Cash Shaker puts print when the market's going up. Right? I mean, it's the simplest way of investing. Right? You sell the put, you wait, stock goes up, you either buy them back or let them expire worthless. When the market's going up, no problem. How did you survive the 20% drawdown on the SPY? And within that, if you had high beta stocks like Palantirs and HIMS and Hood and things like that, when they went down 60%, how did you handle that cash secured put time? That's the key. That's the key, sir. Okay, I don't know what this means. Sergio, we did not see your marker. Elaborate on that. I don't know what that means. Marker? I mean, I know what a marker is. When I go to Vegas, I sign a marker and give me money, and then I pay him back a week later. I don't know. Okay. So that's where we are, folks. Let's go to the positions. Let's take this off. Let's add this. Let's see. I learned. I'm clicking the right buttons, folks. Still a lot of positions, but trimming quite a bit. Let's go through them. Okay, everything highlighted is a lot of positions. Everything highlighted is open for now. So, FYI, I do post my positions for the regular subscribers every Monday, Wednesday, Friday. I will post these after the call today. It looks like highlighted, so you know it's open, okay? But for the members group, I post it every day in the chat. So I have a member Telegram chat group for my members. If you want to become a member, click join. Email me, sergio@sergioavedian.com. You get a whole bunch of things. You get my trades live. As soon as I do it, I post it up there. So again, none of it is financial or trading advice. You can tag along. You can not tag along. Do your own due diligence. Not my thing. I'll put them up there. You understand it, you understand it. If you don't understand options, if you don't understand Greeks, if you don't understand synthetics and strangles, and if you've just been selling cash secure puts, welcome to the show. You're going to learn a lot. And because there is a million ways to skin a cat. Cash secure puts are fine. Wheeling is fine, but that's just really just, I don't know, elementary school stuff. But again, I'm not knocking it. It's valid at all. It's good. When the market's going up, you'll make money. It's when the market turns, what do you do with it? Long story short, so we put on, when I say we, chat and whatever not. Beautiful trade, actually. So we were waiting on Apple to break out. Apple broke out finally. Catch-up trade, actually, to the rest of the Mag 7. I did it with AAPU, which is the 2x ETF of Apple. I sold the August 20 puts, and I bought the August 25 calls with credits, or basically even. Closed all the puts now, and this was a 2-to-1, by the way, turbocharged synthetic, meaning so I was short 30 puts and I was long 60 calls. So as you guys can see, I'm down to 10. I'll keep that for entertainment purposes, but covered the puts with close to 50% profits, sold the calls with about 70% profit, so that's good. This is circle. I'm in a strangle. These are the prices. I will post all these again today. So I'm short one of the July 18th expiration 120 put on circle. Stock is 187. And I'm short 2 of the 140 puts. I sold the 120 puts at 320. They're down to 50 cents. I sold the 140 puts at 466. They're down to $1.15. In this case, it's good that it's less than what I sold it for, if you know what a naked or short strangle is. I sold July 18 expiration 320 calls at 750. They're down to $1.28. And I sold the July 18th 330 calls at $10. They're down to $1.80. And now we're going to allow theta decay to take care of it, although everyone is up 80-90%. I'll probably give it a few days. I don't think I'll let it go all the way to expiration. Crazy things happen. When you're up 80-90% on a strangle, you take it, although you should take it at 50%, and I did. I was short the 340 calls when the stock was 280 at a cost of $36, and they died. I bought them back at $6, so beautiful position. So we're just going to watch them melt a little bit more. I have another naked or short strangle on CoreWeave. Short the 125 puts, short the 220 calls. I'm short the 125 puts at 486. They're at $1.95. And I rolled down the calls, by the way, just like I rolled the calls on Circle, because the stock went down, obviously. I was in the 260 calls with a total of $8. I bought those back at nothing almost and rolled them to 220 calls. That's why the price is low, $1.60, and they're 77 cents. So that's working out beautifully. Next position is Fuel Cell. Stock is 550. I am short 25 of the July 7 puts at $1.35. They're $1.55. I'm willing to get assigned. I'm willing to take the stock at 565 range. It'll turn into a swing trade. But if it does rally, again, I'll post all these. And then please go check out every Monday, Wednesday, Friday, the post. You guys can see what's happening in the account, okay? What positions I had when I closed. You can figure out if they were profitable or not, or losses. So that's Fuel Cell. Next one, Gorilla Technology. I was short puts, bunch of puts. 25s, 22.5s, and 20s. Stock popped after earnings, covered those, made good money. With that money that so when I'm doing a synthetic, there's two ways doing a synthetic. What's a synthetic, right? Instead of, it's very, well, equity efficient way to participate on the upside or downside in something, okay? Instead of buying the shares, right, laying out all that cash, you sell a put, buy the call simultaneously. And they don't have to be the same strike. And they don't even have to be the same expiration. So but you create a synthetic position, synthetic long or synthetic short position. So sometimes when I do create synthetic longs or shorts, I do, the ratio is different, but then the strikes are different, expirations are different, but the ideology is the same. So basically what you're trying to do is sell the put, take the money in from the put side and spend some of that money, not some of it, not all of it, on either a call debit spread or calls. This is what happened in this case. I'm long August now. 20 options I'm long the 30s, short the 40s, a little bit of a loss, but I took in so much money on the put side on the rally that I'm not concerned. I will not let it hit the wall, obviously. This is Oscar Health, 1645. I started layering the position again. I got lucky on this one. I'm not going to deny it. I mean, you guys can go again, check the community page to see the positions. I had a synthetic on. I took it off, 75% of it the day before it tanked because of the news of the ACA. Now I'm layering the position back on again. What am I doing? Okay, I'm selling 17 puts and 20 puts August and buying the 20 calls and selling the 28 calls as a call debit spread. Yesterday, actually, I was able to do the 17, 20, 28 at $1.60. I tried to add more to it at 2 today. I couldn't do it, but maybe on Monday we'll get down to that. This is another one, Rigetti Computing. RGTI is the symbol. Yeah, we put that on yesterday, and positions up like 60%, maybe somewhere in that range. So on this one, again, synthetic, but unequal synthetic. August, I sold the August 12 puts with a cost of $1.55. Well, as you guys can see, it says zero now because I covered them today at $1.05, $1.10, and $1. So cover the short put side, leave the calls alone now for a good ride up. Average cost on the calls are 92 cents. We're at $1.30 range, so going to keep the calls. That's another position. And here's another one. I'm short 200 shares of Sezzle. This is very taxing on my buying power, but I'm going to do it anyway. I like having balance, so I'm short 200 shares of Sezzle. 177 cost. Stock closed at 181. But this is a covered put. I'm also short 2 of the 170 puts at a cost of $10.07. They're down to $6, right? So what do? You short a stock, you sell a put, or you buy a stock and sell a call. In the case of buying a stock, selling a call, it's called a covered call. In the case of shorting a stock and selling a put, it's called a covered put. So these are July 18 expiration. Okay, stock is 180. I have a 4-point loss in the stock, but I have a 4-point gain on the options because I sold them, right? So if the stock is below 70, I'm going to get assigned 200 shares at 170, less the premium $10, 160. Well, I shorted it at 177. That's 17-point gain on 200 shares. That's like $3,500. But now, if stock doesn't go down to 170, stays above 170, okay, then all that premium is mine. Okay, then what? Now my cost basis has gone up on the short from 177 to 187, right? Same way. This is sort of just in reverse. SMCI, I can't get a hold of the stock. I'm just long 20 options, August 60s. I think it's going to break out. I think it's going to have a melt up, but I'm just not sure. Next position, short 1,000 shares of SoFi, 1848. Stock is 1853, so about break even. When I say short, by the way, I'm short the shares, physical shares. If you guys don't know what that means, please Google it. But when I do this is another covered put position. I sold the weeklies, which expired today. I sold 10 of the 10 of the puts at 25 cents. Okay, so stock is above 18. Okay, so that 25, see, is zero. I collected $250. Now, my short position from 1848 plus to 25 is almost 1875. And I do this just to I want the stocks to go down when I short it, by the way. Don't get me wrong, okay? I definitely do. Okay. And today, I started buying puts, index puts, more hedge. I'm not that net long. Actually, if I keep buying more puts and short more stocks, I'm going to be net short probably by next week. So where are we? I started buying August expiration, August 15 expiration, 610 SPY puts. I bought just 10 with a cost of 637. They closed at 641. Okay, fine. It's just a little hedge. Another position. Man, I have a lot of positions. I'm short 600 shares of TSSI, TSS Inc. I'm short at 30.13, but I sold again, covered put. I sold July 18th expiration, $30 puts at $3.40. So what does that do? 30.15 minus the 340. That's 3.5 shares. That's $2,000. If the stock is under 30, I get assigned, automatically close my short position. If I don't get assigned, the premium is mine. I will sell the options again. So basically it. But I do want the stock to go down, obviously, right? That's what I want. Last but not least, I added to this yesterday. I'm long 3,500 shares of WeRide at an average cost of 809. Stock is 810, basically break-even range. But this is a cover call, the opposite of a cover put. I sold 35 of the July expiration 10 calls at 38 cents. They're down to 25 cents, 20 cents. If the stock is above 10, great. It's a $10,000 trade. If the stock is below 10, I collect the premium, lower the cost basis. Whew, that's a lot of positions, man. Anyway, so that's where we are, folks. Okie dokie. We're going to look at charts in a minute. Let me get to the front. How do I do that? Oh, right there. Okay. Okie dokie. What do you mean marker? When you were talking about the graph, it was not showing on the screen. Really? Like this one? Well, I hope it did. I thought it was because I saw myself in the little box and then the big box, but okay. Okay, well, sorry. In my book, the economy is in trouble when all indexes trade below 200. Well, that's not happening, is it? We're way above 200. I mean, way above 200 EMA. So that means we're not in trouble, I guess. Are Nike, Google, Kava, you still? Yep, well, they're in my, if you remember or not a member, you know that they're in my investment account. I have two accounts, trading account, investment account. They're all doing fine. I got lucky. I bought them when the stocks tanked. I was all cash. Last year's 3 stocks, okay, was Palantir, and I sold that with a double, and it went up 10x after that. But I had 2 super bangers. I had Carvana, I had Kava. Carvana turned into like 5x in a year and 4 months or 3 months, and Kava turned into like 6x. Again, I sold them early, but then 5x, 6x, right? Okay. Then I was all cash, pulled back. I got back into Kava. I got into U, pretty diversified, long term. Those are the 4. I'm looking to buy a couple more in there, but those are the 4 that I have. They're not my favorite long-term picks, but it's for a diversified portfolio. And I was eyeing for those. I was like, I like Google because I think it's cheap. It was cheap. I paid 143. I don't know what it is, 170 something. Nike, one of my members actually walked me up to it, Marcio. He said, Nike is cheap, Serge. And I'm going like, why is it cheap? It's been going down for like years while the market's making all-time highs. Then I looked at it and I go, okay, it's like the same price as it was like 11 years ago. I'm like, okay, that's cool. So I paid like 53 for that. And then look, I got lucky. All those and it turned, earnings came out and stock is 70 something now. Google, same thing. Unity Software, I like it. I think there's a takeout possibility there. And Kava that I had bought at 32 while I was eating lunch 2 years ago, first time. But I see the lines around the store. I'm like, what the heck is this? I bought it. Stock went from 30 to 185. I took my 5X. And then it dropped. It got really super overpriced, obviously. And then it dropped to the 80s. I paid for some like 74. It's like 80 something now, 85, but I have cash secure puts on that in the investment account as well. So pretty diversified. A food stock, tech stock, software stock, and a retail stock, which were all beaten down. And I'm like, it kind of makes sense. So that, for me anyway, yeah. So in the long-term account, folks, you have to understand the tax situation in long-term accounts. If you hold a stock 1 year, 1 day, you're going to get taxed. You're going to get taxed at 19%, which is long-term capital gains tax rate. On the other account, the short term everything is short term, right? We're trading options, weekly, daily, whatever. Now you're dealing with short-term capital gains taxes. Those two rates are drastically different. So in my long-term account, I try to hold things for a year and 1 day. So then the tax rates are very favorable, even if I sell it. On the short side, your tax rates are going to be your short-term capital gains side. Your tax rates are going to be your ordinary income level. So your taxes are going to be definitely higher in the 30, 35, maybe some 40% range. So that's why I'm going to finish by saying this. If you are trading, not investing, trading, and if you are not getting 3, 4, 5x of the S&P 500, do not trade because it doesn't make sense. Okay. But if you're investing, that's a completely different story. So yeah, that's where we are. So I'm going to end it here. Thank you for joining me. I'm going to do this again on Monday, Trading with Sergio, Monday edition. The positions I'll post on the community page as I do Monday, Wednesday, Friday. If you want to become a member, click join. Send me an email, sergio@sergioavedian.com. What you get as a member is in the show notes or is in the notes of this. Please watch the video coming out today about the wealth gap, as high as it's been. Yesterday's video is getting good traction. It's about Elon for president. We know Elon cannot be president because he wasn't born here, but if he starts the America Party, he may have a candidate for it. I can't be president either. I wasn't born in this country, but I will support the America Party. Yeah. Because I think, as my rant went a little too long, I'm sick of both sides. Truly sick of both sides. Okay, Sun Kite 1 says, if you're a trader, make sure you're marked to market for short losses. Rick, your account marks you to market every second, my man. That's the point. You know, on Think or Swim, it's upper left-hand corner. It's your net liquidation value, or account equity. That doesn't lock your scoreboard. They do mark to market every second of every day. And if you're with a reasonable broker anyway. So yeah, that's your scoreboard. Scoreboard don't lie. You can say, oh, I'm short this, long this, cash secure put, I'm rolling down. Doesn't matter, bro. It's all in the account value. It's not going to lie. I mean, simple as that. So that should be your only scoreboard. Only thing you pay attention to. Nothing more, nothing less. Anyhow, so happy 4th, everyone. Enjoy the weekend. I'm going to enjoy it. I'm going to have some drinks. Hopefully, my son will not blow his fingers off doing some fireworks in my backyard. Behind me is my backyard, by the way. Yeah, eat some barbecue and get ready for Monday to battle. Yeah, happy 4th. Happy birthday, America. Although, America, you're being run by a bunch of dickheads. I'm sorry, America. You shouldn't be in this situation. But you are. And hopefully they go away. Anyway, happy 4th, everyone. Be safe, please. I'll be back on Monday. And thank you for the support. Please share. Please put a thumbs up. Yeah, that's it. Have a good one.